Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Thursday afternoon, we have Joyce, Managing Director on Nasdaq's Market Intelligence Desk, for a refresh on technical levels in the Nasdaq-100. We're also going to talk some Bitcoin as well. Brian, it's great to see you as always. And let's pull up some charts here. What levels are you looking at in the Nasdaq-100?
Okay, well, I mean, things have definitely been improving over the last week. We were discussing, the weakness in breadth, throughout the month of January and then the end of month sell-off. But so far in February, things are bouncing back. The Nasdaq-100 up 6% for the month. Year to date, it's about 6.5%. If you look here, this is a 30-minute period chart, so we're really zooming in, and you can see this was the the late Jan sell-off, and we've recovered those losses, made new highs, and we're consolidating here at yesterday's highs. So that's a very short-term time frame here on the daily. Zoom out a little bit. Well, that's pardon me here. There we go. You can see. So we're now yesterday made a new all-time high in the NDX. So still looks great. The RSI is consolidating right here in the mid 60 level. It's been in the bullish range for quite some time. The move off the lows is just phenomenal. We can see from March of last year to this week's high, it's up 104%. So everything looks great. We have been discussing the weakness in breadth. This number of stocks making 52-week highs down here. That's been making lower highs since November. And then the stocks trading above the 50-day average had been tailing off as well. Both are beginning to come back. So we'll see how the breadth improves going forward. Looking at the semiconductors, which make up a decent amount of the technology space, that group is also bouncing back. They lost about 8 or 9% off their highs in late January. This week they're up about 10%. So you can see they've recovered the gains. And they're making new all-time highs this week. So, certainly very constructive price action, and it's amazing to see how far this market has come, but it'll be interesting to see how far we continue to go.
Yeah, Brian, 2021 certainly is taking a cue from 2020, and just some really interesting things happening in the market. Of course, it's been the trading activity that we've seen for, the first 6 weeks of the year. And part of that, in addition to cannabis stocks and some of the other highly traded or active names, Bitcoin, right? I mean, over 48,000 for the first time, and just you're continuing to see that institutional adoption and companies like Nasdaq-100 listed Tesla incorporated into its balance sheet.
Yeah, absolutely. And it'd be interesting to see going forward how many other companies follow Tesla's lead there and begin to acquire more Bitcoin. Maybe they could be seen as a way to diversify, risk, at the currency level. And if more companies jump on board, that may, cause others to have to follow, fear of being left out, so to speak. This here is a monthly period chart of Bitcoin. It's up over 200% in the last 3 months. Just, phenomenal move. This is the type of price action it's done over the years. If you go back to 15 and 16, or from the 15 lows to the 17 highs, up almost 2,000%. And Bitcoin is now up over 4,400% from its last year's lows in 2020. So just, phenomenal gains. And, I again, if we go back to the dollar, I mean, there's not a perfect inverse correlation, but we have been seeing risk assets rallying, very well as the dollar weakens. And we spoke about the dollar last week. I was highlighting the recent bounce we've been seeing in the dollar, and it did break out above this level that we were looking at, but only lasted for 1 or 2 sessions, and then we pulled right back. And if we look at, say, the longer term weekly period chart of the dollar here, we can see the trend since last year in March has been down, a little bit of a hockey stick action. It's called a bear flag, then straight down, then we bear flagged again, down. And right now, the question is, are we coming out of another bear flag and resuming the downside? That would be relatively positive for risk assets, particularly cyclicals like energy, financials. Here's the longer term weekly period chart of the dollar. And this definitely want to keep in mind, if we begin to break down these lows, down below these recent lows, take a look at what what happened back here in 2014, 2015. Dollar had a phenomenal rise from the 80 level all the way up to 93, 94. So that zone right here it could be seen as a bit of an air pocket. So even though we're seeing a little bit of a bear market rally right now, if this resumes to the downside, we could still continue to see a steep decline. I would think that would be good for risk assets.
All right, Brian, appreciate the insight as always. Thanks for joining us on Trade Talks. Thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.